Okay, so in this video, I'm going to be going over the bands. Okay. Um, this is Jarvis with only Jarvis and the Bullish band um, enabled. There was a post that I put on TikTok. You guys should follow us there, where I asked ChatGPT, you know, what we developed from our dev team, like what's the complexity of Jarvis, brain power wise. Okay. And when it comes to these different bands and trend lines and all the other stuff, right? Oscillators. It utilizes math primarily to calculate all of this, okay? And those complexities have decision points. We call them, let's just call them, intelligent decision points. Something like a Bollinger Band is about 20 to 20, like 20 to 25 or 15 to 25 decision points. Okay, that's the Bollinger Band. A a pretty decent grade, like OHLC type of indicator, right? Could have about maybe 200 to 300 decision points. Jarvis has 2,000 to 2,600 decision points. So I wanted to put it out there in this video. Okay, Jarvis is the real deal. So with that being said, you have all the brain power that you need on your chart. You really don't need much more. You got enough. 2,000 to 2,600 decision points. That's the brain power behind Jarvis. Jarvis cannot predict the market, but with that type of brain power, yeah, it's pretty damn good. Okay, so let's get into these bands so you guys can understand what I mean by this. Because sometimes it's not about heavy complexities. Like Jarvis is a complex protocol. Sometimes it's just about things that just are simple. You can have something complex, extremely complex, but then you wrap something around it that's very simple. That's where the Bollinger Bands come in. And that's why, for me, as a trader and as a software engineer, um, I love the Bollinger Bands. It's simple, it's clean, and it's simple. But it has a lot of nuance that we're going to talk about in this video here. So without further ado, let's get into it. Um, we're currently in an MNQ buy. The HUD is basically cold. That's what the black sphere is there for. It basically means that this is a new key, so there's no statistics, and there's no statistics. Jarvis won't put out any statistics. Now, that's just for statistics. That's for the HUD. But if there was a way to enter via C2, C3, which would be the confirmation candles, or A1, which is acceptance, or A2 for commitment, it would have printed those specific entry points in this structure. But it did not. So from a entry point into this structure that's building out currently, there was no entry at all. But that's okay. Let's just say you wanted to live life a little dangerously. Okay. Uh, you could have probably risked and take an entry. Okay. And this is probably how you would do it. I know when it comes to back testing, a lot of traders say, well, you can say what you want now because the structure has already been built out. But that's not the truth. That's not really what it is. Follow the breadcrumbs of price. The market will always drop these little breadcrumbs. You just got to know how to interpret it. And sometimes the market puts out false interpretations to fake you out because that's just what the market loves to do. They doesn't want to see you win. It's the house, right? You're the customer or so-called trader, but you don't own the house. Okay, the house is always going to have more leverage. because they're the market makers. They're the ones who develop, they're the ones who create these candles, create these structures. So when you look at this structure here, first thing that pops out at me, okay, um, is that this was a big, big candle. Okay, the candle started below the EMA21 and it crossed over the EMA21, it crossed over the 50, it crossed over the Bollinger upper band, and it crossed over the 200. So all of the bands, by the time this closed, this candle was over all of the bands. So that's a lot for a candle to do on a 2-minute chart. What could you do? When you're entering into a structure limit wise, always enter on a closed candle. Do not enter on an open candle. When you pull your stop loss, bring your stop loss to a wick. Never bring it to a body of a candle. That's one of the worst things you can do. Because the wick has the extremities of price. That's where liquidity grabs happen, right? So always pull it to the wick. When you're dealing with a stop loss, always enter on a candle close. So now you ask yourself, let's kind of like replay this. One thing to add is Jarvis is replay safe. So if you replay to the beginning of the signal, whatever you saw in that HUD is exactly what you saw real time. So that's something to keep in mind. So now we play this through. Boom. That's a big, big, big candle. Um, Confirmation C2 was an E grade. So you ask yourself, that's a big candle. What do I do? Well, number one, you don't enter here. Why? Because current price is here. You don't want to do that. So this was a big candle that crossed about one, two, three, four bands, and it got stopped at this bearish PTR. And I said this in the other video. This bearish PTRs from Jarvis are magnetic points. Look how long this PTR has been alive. 440 bars on a 2-minute chart. Okay, that's many, 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 many hours, and it's still existing. It has not created a new PTR yet, and this is a magnet. So now it got rejected, obviously, because that's a lot of pressure, right? You literally have a candle going over the 21, over the Bollinger Band upper. You can see it crossed over that. It crossed over the 50 and the 200, and the 200 is the slowest band in you know Jarvis's preview. It's the slowest band. So at the end of the day, what exactly, like where would you enter? Um, that's when you have to scroll to the left, right? And you start to look and see exactly, where could I enter that I feel like price could probably bounce from? You could use the 50, okay? You could use the 21. How do you do that? Come to this point or this point and find a candle. I see a candle right over here. Hit the magnet, take your long box. Here you go. See that? That's pretty close. Now, when it comes to wicks, you got to go with the furthest wick, right? My max ticks that I use is 250. So let's see how far I can bring this down. How much can risk can I take? It's looking like it's looking like this wick here. So that's what I would use if I was going to enter on this here. If I'm using the 50, that's about as far as I can go for this wick. That's as much as I can afford. Could I use this wick? Technically, I could use this wick, but look how much I got to risk. It's a lot of risk. It's too much risk. So I'm gonna go with. I mean, yeah, I'll go with this one because first point is this is about 9 points, 9 ticks over, so it's not too big of a deal. That's one because it's about discipline. Okay, your risk is what matters the most. It's not really about how many R's you do. It's about how much risk you're willing to lose. That's what's on the table because this RR hasn't happened yet. You know what's currently happening right now? This risk. Okay, that's what's on you right now. This is future projection. This is what you have right now on you. So that's at least not too bad because why? A, my stop goes below the 50 and it goes below the Bollinger Band upper and it goes below the 21. Pull this back up to here. 1.78R. Not too bad. Take it right back up to the top of um, the bottom of the PTR. That's one way. That's one entry. If you want to be even more safe, do a long. See that? The snapping. See where we are right now in this candle that's being developed right now. Here. Now, what wick could I use? Remember, the first wick that I could use was this one, right? It was this guy, this wick right over here. Let's see how far down I can go with this one here. Take this off of the snap. Let's drag this down. How far down can I go? So, I get a little bit more safety net. Gets this almost to the open of this massive candle. So let's say I wanted to play it safe. Come back up here. Ooh, look at that. Our R's went up a little bit. 2.12. That's cool. Let's play this through. There you go. See that? Now, another thing. This was a nice move. This is what I like. This is what you want, man. And this is like this is what you want. All right? You want the market to just come in and just tip their toes in the water, just tip and then go. I like this tip. This is very nice. Matter of fact, what's legendary is if you just see the wick. There's no body at all, just wick, and he goes. It's phenomenal. So this was a nice run. This is nice, right? Because what you did was you looked at the bands. Pay attention to these Bollinger Bands. Bollinger Band is definitely not in regards to intelligence, complexity. It's not even in the same field as Jarvis at all, and it shouldn't be because it's simpler. It has a much simpler task. Jarvis is synthesizing the entire market with all these blocks. Bollinger Band is more of an emotion. It's more. I look at it like it's more of an organism in a way. Like you know what I mean? Like it's not so structured and blocky. It's very fluid. You know, it shows the emotion of the market. Quite frankly, that's what it is. because it deals with velocity, it deals with volatility. That's what those bands are. So it's the emotion, it's the market emotion. So now you could have done the 50, like I said before, and you would have been tapped in even sooner, but then you would have been, further in the stop loss and have you sweating a little bit. What you want to do is bring it to the point where you're not using too much of your wrist to get more gain. So always enter on close. So if you look at this, technically, even though I clicked here, this is actually a red candle. That was a TP for this sell signal because it's black. It's really under here. This is the red candle too. See this red candle? That's your close. Always enter your limit on a closed candle. So that's why when you're trading, obviously don't make assumptions. Don't be like, I'm gonna put my I'm gonna go ahead and put my long box somewhere in here. No, go back. Go to the left. See any candles here that lines up with your structure that you want to enter in, and then choose it. Okay, so that was a beautiful play. Like, because watch what's going to happen here. Let's continue this guy. There you go. TP. Nice. Now, this HUD is obviously cold. There's no data. There's no statistics. There's not even an entry on this structure. And Jarvis is right. There is no entry on the births of the structure. But here's where you come in and you break the fourth wall, like Deadpool, and you can see even further than what Jarvis can see because Jarvis is basically journaling real time. You look around and say, wait a minute though. Yeah, Jarvis, you're right. Because technically, Jarvis was right. I did not enter on this candle. I didn't enter here. I didn't enter here or here. I entered technically on this close of this candle at 414. This candle here was at 504. I mean, 304. I entered here at 212. This is over damn near almost an hour ago. If you look at it, right? That's where I entered. So Jarvis was right. In this particular current structure, there was no entry. That's what you could do. Now, could the market just come here and then completely dump? It could. So here's how you fix that. This is signal one. And then, pardon the long videos, but this is what you have to learn. This is like a tutorial slash understanding Jarvis slash the Jarvis language, you know data model that we review, and just an understanding of market structure. This is considered in Jarvis terminology a C1 candle. C number one. This is the signal. This is C2. This is confirmation of this signal. C3. This is the confirmation of this candle and this signal. So it is a C2 and a C3. Both C2 and C3 had no entries because these were not momentum. This was not a momentum type of structure, if I had to guess. Because if it was, it would have printed a C2 or C3 label here. It did not print it, so this was not a momentum trade. Thirdly, this is your acceptance candle. From what I can tell, this acceptance candle, this was definitely a rejection because look where it closed. It closed back into the side of this candle. So if it was definitely, in my opinion, it was a rejection because this was your confirmation here. It closed way below your confirmation, so this was a rejection, but that's fine. This is your acceptance candle. This is your audit slash commitment candle. If this had closed strongly for acceptance, this would be tested for your follow through. Was the follow through strong, weak, or was it rejected? If this candle was weak, not rejected but weak, this would be your commitment. So technically, this is how many candles you're going to have. A total of 5 max. All right, which is the signal, C2, C3 if you have it, A1, A2. By this time, the DNA already printed. So this is where you count. Structure changes, what we believe is, it's just our opinion because we didn't create the market, right? But this is our opinion. The market has ideas, and that idea has a decay. Can't stay forever. I'll give you an example. If you're ordering a pie from, let's say, one of these pizza places, and they say they'll be there in 20 minutes, and you look at your clock and you see it's 30 minutes, 40 minutes, you know what you're going to do? Go and cancel that order, right? Why would you keep the order open? It didn't come in the time that you expected. Same for entries. You place your order, you now have to wait. What you do is, and what we have in the Jarvis doctrine is, the maximum number of candles for you to wait on the 2-minute chart is 12 candles. That's 24 minutes. That's the max you give the market to tap you in. And where does it start from? The next candle after A2. So if this was C2, C3, A1, A2, you start here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You draw this vertical line here. So when you draw that vertical line there, that tells you how long is it going to take for your order to get picked up. Put this box back in. If you don't get a tap in by this time, get out. When this candle is done and it hasn't tapped you in yet, get out. But look what happened. This was a 12 candle, right? 11, 11, 10, 9, 8. You got tapped in on the 8th candle. Sounds good to me. The reason why you don't want to wait forever is this. The market is accumulating sideways for some time and it hasn't tapped you in, and it comes down here. The idea initially from this point is probably decayed. And now when it comes into this stop loss, it's actually creating a new structure. And that structure could be a sell going to the downside. Or it could be a liquidity pool, a liquidity grab, where it goes in and drops even lower down to here, then it goes back up. That's why you don't want to have a long order time waiting out there for you to get picked up. So this is the video. Hope you guys enjoyed it, right? Don't be afraid of the market. Don't be afraid of it. Remember, it's organized chaos. And follow the breadcrumbs of price. Stop assuming, stop making assumptions. Oh, this market hit this particular PD array 2, 3 times. So definitely now for sure it's going to go down. Don't do that. Stop doing that unless you are like Mr. ICT himself. But this guy hasn't, he wasn't just started trading, right? He's been in the game for a very long time. Many, 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 many years. So keep it simple, man. Follow the breadcrumbs of price. If a candle goes all the way through these bands, you dealing with a range of 50-50 is a 50-50 chance that that next candle is just going to dump all the way back down to where it's, and it can do that. It can definitely do that. The market is crazy like that. It can do that. But here's the thing. Normally when you see stuff like that, take a look at your state, because normally that happens in compression. If there's no compression, you just see neutral or expansion. I don't think this would be happening like that. But if you do see compression though, it could happen. It could literally go all the way up and come all the way back down in the next candle, or the third or the fourth candle just dumps all the way down and it stomps you out, and it's fine. It's okay. You're gonna get losses in the market, but what you don't want to do is get a loss because you didn't know what you were doing. So that's all that you really need. Jarvis, obviously, that's the centerpiece, that's the brains of the chart, and then your Bollinger Bands. That means, and also too with your Bollinger Bands, disable the basis. You don't need this. Get rid of it. Just use your upper and lower. Why? Jarvis already has the 21 and the 50. Normally, that's how the Bollinger Band flows anyway. I'll give you an example. Let me turn it back on for you so you can see what I mean. You see what I mean? It's like it's the points where it needs to make its move. You see, it's meeting in the same area, just about, right? So keep it clean. Just get rid of it, man. You don't need it. Just have the upper and lower. Those are your two extremities anyway. Deal with your extremities on the Bollinger Bands. Keep the 21 and keep the 21 in the 50 of Jarvis and follow that as your basis. Um, but yeah, that's basically it. You know, follow the bands. Follow the bands. The bands is everything. 200 is always the last to move, so it'd be the 200, then the 50, then the 21, and then the Bollinger Band lower and upper and lower. Those are your volatility points. So it will just expand. That's what it does, right? Um, when you see a massive extension candle or a massive distribution, you know what the Bollinger Band does? It expands itself. That means the upper will go upper, and then the lower will go lower, and it just opens up, right? That's what it does, and it creates this little micro bubble in here. A lot of energy stored. You see that? It's like a bubble, like a little circle bubble here inside of the Bollinger Band. Okay, so I hope you guys enjoyed the video. More to come. This is Jarvis.